What's going on, everyone? My name is Jeff, and in today's video we are going to talk about 2 ETFs to buy now in the month of April 2019. Now, one thing I will say about ETFs is that historically and with my experience, you can trade ETFs most of the time a lot safer than you can typical stocks. I feel like predicting the movement in individual stocks has become a lot more difficult. And of course, guys, one of the biggest problems that we all are dealing with right now is just the raw uncertainty of where the market is going to go from here. And my interest in ETFs has went up quite a bit over the past couple of years. So right here, I have an ETF country heat map pulled up. And as you can see, one point I will make is that pretty much worldwide right now, ETFs are seeing some level of return. And of course, if you like to trade rather than invest, you might want to give some thought to trading ETFs. And of course, if you are new to this channel, make sure to subscribe so you don't miss any future content or update videos. And feel free to drop me a thumbs up, guys. I appreciate all the support you give. So the first ETF we're going to talk about, guys, is ticker symbol KWEB, and that's the Crane Shares CSI China Internet ETF. So this is a high growth play on the recovery of the Chinese market. And as we all know, China has had a terrible year in 2018. Their markets have tanked much worse than even the American markets. But you have to keep in mind that China has some of the best companies in the world. And I feel like if you are a growth investor and a true tech investor, your portfolio is not complete until you have some exposure into some of the companies KWEB offers. Now let's talk a little bit about the asset allocation. Like I said, this is a Chinese internet ETF. So you're going to see the biggest tech giants in China. You're also going to get exposure to a lot of the newer up and coming companies and some companies that have recently IPO'd. It's a very exciting fund, I think, to get involved with. You're getting about 9% exposure to Tencent, 9% exposure to Alibaba, almost 7% exposure to Baidu. And from there, guys, the percentages fall. Some of these companies are a little bit higher risk, but I feel like it is really anchored, by Tencent, Alibaba, and Baidu. But you're going to get some exposure to NetEase and JD.com. Tencent Music, if you were wanting to get involved with that stock, which has just recently IPO'd over the past couple of months, you're getting 4.6% exposure there. And then 58.com, IQIY, this is a stock I actually want to do a stock analysis video on. Momo, Weibo Corp, that is also a very big and up and coming company. And you're also getting some exposure to VipShop, Alibaba Pictures, Bilibili, and many more, okay? Let's go visit the chart so you can see what kind of pricing action they've had. And so right here, guys, I've got the 5-year chart pulled up on KWEB. As you can see, it did not see a lot of growth until around 2016, 2017, and that is when KWEB really grew from around $34 a share all the way up to close to $70 a share in early 2018. Now, so that's why I think the 1-year chart speaks a lot more volumes about why this fund is so investable. Back in June of 2018, this fund was trading around $64 to $65 a share. And guys, pretty much that is when the trade war took full swing. This ETF, along with the Chinese market, got absolutely hammered, and this fund traded all the way down to roughly $36 in early January of this year, but has seen an incredible amount of return since. And guys, I think it is just getting started. Back in early March, it was up over $48 a share, and now is currently trading up over $49, okay? And so let's get to some of the information I'm sure you all are wondering about. This fund actually started in July of 2013, and it has a 0.7% expense ratio, which at first glance does seem a little expensive. But it does have a 2.64% distribution yield, and so you are going to receive a pretty nice dividend payment. And guys, like I've always mentioned, I don't get into these ETFs, really for the dividend. I have other stocks and holdings I hold specifically for dividends. So the American markets are mostly recovered, guys. We are getting close to all-time highs again, and the Chinese market is still in the process of recovering. Your dollar might be better spent on a trade or a long position, investing into KWEB. And the second ETF that I will be buying during the month of April, guys, is ticker symbol UWT. I know anybody that has watched this channel over a long period of time knows that I trade this ETF quite often. It is actually a 3 times long oil ETN. And so this is very, very high risk and very hypersensitive to the price of oil. And that's why I don't really call this ETF an investment. I actually call this one a trade, okay? I want to make that very, very clear. This is not something I feel comfortable making a long-term investment in. I would rather buy Royal Dutch Shell or ExxonMobil, Chevron, or BP if I'm gonna go long with an oil company. Guys, I have gotten some really, really good returns on UWT. Let's get into that now. And again, let's go to the objective of this fund. Guys, it provides daily 3 times leveraged exposure to an index of front month WTI crude oil futures, okay? So this is going to trade almost identically to the price of crude oil. And here, even in the UWT Analytics Insight, the first sentence, guys, it tells it all. As a leveraged product, UWT is not a buy and hold ETF, it is a short-term tactical instrument. And even if you are a day trader, I look at UWT as a very good source of daily income. Now this fund is traded directly off the pricing of crude oil, so there's no real holdings that I can share with you. So let's just kind of get down to business, then we'll go take a look at crude pricing and compare it to the chart of UWT. But the inception date was in December of 2016. It does have a 1.5% expense ratio. And of course, UWT does not pay a dividend. But again, guys, we're not going to be going long with this. This one is simply for trade. In 2018, crude oil really held its value quite well. You know, back here in May, around this $71 to $72 mark. Then, of course, in July, got up around $73, $74. As you can see, crude oil was very steady throughout 2018. Up until about October, okay? Crude got up as high as $75 and $76 a barrel, and then it's seen a crash along with the rest of the market. Now, a lot of people are going to even theorize that what caused the big correction in the stock market was the price of crude oil dropping so dramatically. And then, of course, here at the end of December, it crashed all the way down to $42 a barrel, okay? And has since then recovered itself nicely and is currently around $63 a barrel, okay? And now I've got the 1-year chart pulled up on UWT, guys, and it's pretty much the same story. Obviously, this ETN is going to see a little bit more volatility than the actual price of crude oil. Like I said, seen a high point here in May, then took another dip, and then of course recovering in early July before taking another dip, and then of course hitting this high in early October before the price of crude crashed all the way down here to these lows in December. And right there, guys, I actually cost averaged down a position on UWT. I even made a video about it back in December and early January and have made multiple trades since then. Now, could the price of crude oil drop again? Absolutely. But keep in mind, it always does recover. This fund is very, very good to use as a trade vehicle. And I do feel that the price of oil is going to continue to recover. And so most importantly, if you are going to trade UWT, make sure to track the daily pricing on crude oil. But anyways, guys, that's all I got for the video. I really appreciate you watching. Drop a comment, let me know some ETFs you're interested in. Make sure to drop a thumbs up on this video, and thank you as always for watching.